Hello everyone, and thank you for watching this weekly technical analysis video of the top 3 FX pairs that might attract attention later this week, and especially on Wednesday when the Reserve Bank of New Zealand and the Bank of Canada will announce their rate decisions. US CPI inflation figures are expected to be released on the same day, so US data could add extra volatility in FX markets. And starting first with the US calendar and the US CPI inflation figures, expectations are for a significant slowdown in the headline CPI inflation measure to 3%, but the core measure could stay above 5% as forecast suggests. So the core measure could still be a source of positive volatility for the US dollar. And if the data surprise to the upside, if the core measure comes above expectations, then dollar yen may attempt to rise back above this broken support trend line seen around 143.70. If that happens, then we may see another test near June's high of 145. While higher than that, I would keep a close eye on the 146.50, 147.70 region, where these two resistance lines are located, as well as the close price from 1998 of 147.24. And now, from a technical perspective, the short-term bias is looking neutral to bearish. We can see that the RSI is close to its 50 neutral mark, but the MACD and the stochastics keep trending downwards. So the base scenario is for the pair to extend this weakness over here, especially after the bearish trend line breakout, in which case I expect support to come around the previous high and near the 141 level. If that fails to hold, then the 50-day moving average and this support trend line from March could add a strong footing under the price, somewhere between 140.30 and 139.60. Otherwise, the sell-off could stretch towards the 138.55 and 138 zone, where the price bounced higher a couple of times back in May and June. And now turning to Canada and the Bank of Canada's rate decision, expectations are for a 25 basis point rate hike this week. And I believe that the central bank will not stop its tightening phase until it sees inflation moving towards its 2% target sustainably. Another rate hike is currently priced in markets with 60% probability. If the central bank raises interest rates by 25 basis points, then that could bring little volatility unless it also uses a hawkish guidance. So if that proves to be the case, we may see dollar loonie reversing lower, in which case I would keep a close eye on whether the price will be able to cross below the 1.3265 and 1.3235 key support zone. This is where this short-term ascending trend line is currently supporting the market. If we fail to hold here, then we may see some consolidation around 1.3190 before we reach the key base from June of 1.3145. Not far below that, the pair could retest the 2021 ascending trend line around 1.3080 before it reaches another ascending line from the 2021 lows that is seen around somewhere between 1.3028 and 1.30. And now looking at the technical indicators, I think that the pair has still the potential for another upside correction. We can see that the RSI is still maintaining an upward trajectory despite weakening a bit below its 50 neutral mark. The MACD is also above its red signal line, and the stochastics have yet to show a more convincing downfall. So if support at 1.3265 holds, we may see a rebound towards these towards the 1.3340 and 1.3380 region. This is where this key broken support line is located, as well as the 50-day moving average. So some consolidation, a tough battle could take place here before we head towards the 1.3450 barrier, while higher than that, we may see another interesting battle somewhere between the 200-day moving average and this key resistance line at 1.35. And finally, turning to New Zealand, the Reserve Bank of New Zealand is expected to keep rates steady as it has clearly stated during its previous policy meeting. We don't expect any actions and the probability for a 25 basis point rate hike is quite low at the moment. Nevertheless, if the central bank uses, if the central bank signals that there's a potential for more rate increases despite its pledge to keep rates steady, that could help Kiwi dollar to climb towards this important resistance line seen around 0.6280 at the moment. There is this broken support trend line at 0.6320 could be another key resistance for the market if the pair resumes its upward direction, if the price successfully overcomes the 0.62 barrier where it has been trading for some time now. Technically, the RSI and the MACD are still are suggesting that buyers are still present, but for the pair to turn higher, we need to secure a strong support around the around the simple moving average just seen near 0.6180. If we fail to rebound here, then the price could weaken towards this tentative support trend line at 0.6080. While lower than that, I believe that the pair could head towards its May's low and the 0.60 psychological mark before it targets this falling trend line at 0.5935. In case, in the bullish case, we overcome this we enter the 0.6320 territory, breaking this ascending line as well, then we may see another test near May's and April's key barrier of 0.6380. We need to overcome that wall in order to accelerate towards the 0.65 and 0.6530 region, where this long-term descending trend line coming from 2021 is located, as well as the high from February of 0.6536. So that's all for this week's key FX pairs. Hope you have a great trading day.